Welcome to Green Bicep. This is part two, continuation of yesterday. I wanted to get it a little bit more into the weeds on what I discussed. And the reason why is I painted a fairly pessimistic picture, but I wanted to give a little bit more context to the situation. So, this illustration is unemployment claims going back to 1970. Uh, each one of these highlighted areas is a recession, except for one technically, but you could see when this green area shoots to the right of this vertical line here, and then it's yellow to the left, that's the recession, and it means that unemployment claims jumped up year over year. And typically it's about a 12-month period each recession. Interestingly enough, our current period, we did have a blip, but it wasn't 12 months, then a recovery, and now we're in a situation that is undefined still. And over here, you can see a list of prior recessions, duration, technically. So ultimately, what does this say? It's all about time. How long could this could things be good, relatively speaking? So we know that the Fed is watching wages, and here you can clearly see wages have been dropping quite dramatically, median wage growth. But we have quite a bit of loan growth still, and so the loan growth is going to drive the economy. And so you might not have wage growth, but you're going to have loan growth, so that businesses and companies are continue to move forward. So this is positive. So in conclusion, it's really short and sweet there. Because there's loan growth, until that turns over, it's likely we're going to see a continued prosperity in the economy, as long as there isn't any. Yeah, it's basically everything's a function of loan growth in most countries, but there's certain types of loans that are more accretive than others. Specifically, capital goods, which we looked at uh, on my last presentation, which is cap X spending essentially, and that has dropped off the new orders for that, and so that's something to watch. So we may be in a situation where the corporations are starting to pull back now, and that's why we started seeing the unemployment claims start to shoot up most recently. So it's really a function of momentum, and so the momentum is going down now. So is that going to turn? The election could determine a lot too, and push the momentum farther in one direction versus reversing it. So I don't know. It's hard to be extremely bullish, except for the fact that inflation is real, and the government's going to likely have to find a way to continue to pay for our national debt. And that may entail issuing treasuries, and which would likely increase the amount of money supply there is in aggregate. And so, with more money supply, then you're likely to see gold, Bitcoin, silver do quite well as the stock market will rise up. That's it for now. Green Bicep it out of here. Thank you.